tend to do is to extrapolate where we just have been. So we're extrapolating out the benefits of the gradual slowdown in labor markets, the normalization. ECI is another great data point. There's nothing in the crystal ball that says that that won't happen. But your question was, what if it does? Then you start to think about these things. And my point is, everyone is so one-sided on this point that the asymmetry to the market reaction is much greater to the upside surprise and strength on Friday than it is to coming in line or even being weaker.
So let's put a call around that, Jeff. Are you basically selling two-year notes right now, trying to lock in because you think that this could be the highs, given that they are not recognizing the risk of an upside surprise to the jobs report?
No, I wouldn't say I'd go that far, but what I would say is it tempers some of the enthusiasm for adding to 2 years at this point when it's all in the price, and even more so relative to what the Fed is saying that you're going to get. So the bar is a little bit higher to what do I do with this information in my portfolio when you look at, well, you know, the bond market's really quite priced a lot of that in. So it makes it a little bit more tricky than just saying, oh, the Fed's going to cut rates and I should back up the truck and buy a whole bunch of duration. Well, a lot of that trade has happened in the last month. So if you're just talking about maintenance cuts and the degree of maintenance cuts that are required, is what you were talking about with Bill Dudley a minute ago. We don't really know where that neutral is. So how do we know where neutral is? You know it when you see it, meaning you know it when you see it in the data. So if the economy doesn't slow and that unemployment rate doesn't continue to rise, and it says you're not so restrictive as you think you are. And I think, you know, we just kind of have a pile up on one side of the debate here when the data is still saying 2.6% PDFP. He said it twice during the press conference. He also said the other thing that has been supportive of restrictiveness, interest rate sensitive sectors and the slowdown in the labor market. But it's a more balanced view around this debate around how restrictive we are than where the market is kind of lining up. And that sets up an asymmetry to the outcomes.
Hey, Jeff, you're a great student of history. And if we have the headlines that John Farrow was talking about there of Tehran and Israel, and for that matter, up to Lebanon as well, how far out the full faith and credit curve does politics, does war, do our fears play in? Is it short term? Is it out to the 2-year pinch? Or is it out even further to the 10-year note?
So I'm going to frame that in that question, or my answer to that question, in terms of how does the kind of flight to quality response in the bond market play out in this environment. I've said this on the show maybe a couple of times. We've written about it. That flight to quality during the QE zero interest rate policy environment was a curve flattener. If you're very close to zero rates in the front end and you're looking for portfolio protection, you buy it in the long end. Today, we're in a very different environment, 5.25 to 5.5. There's plenty of room for the front end to go down. And so it's more of that pre-GFC kind of bond market reaction where flight to quality is a steepener and it's in the front end of the curve. So I think you see the most powerful reaction. It's hard to disentangle the high frequency between the news that Jonathan broke and the result of the press conference, but you do see a little bit of a steep move into the market. Again, hard to disentangle the two, but I think when you take a step back, flight to quality now is the steepener trade, and your better yield response is going to be more in the front end in this kind of environment.
What's interesting to me today, Jeff, is what's not rallying on the heels of some of those headlines, especially in light of the Fed's dovish tilt, yes, but they did not cut rates. It's that the dollar is not catching a bit. It's weakening pretty dramatically. You're seeing the Bank of Japan very happy today. They're getting what they wanted in terms of a little bit more yen strength. How much is this sort of the new narrative that in a flight to safety type of moment, if the Fed is going to cut rates and not recognize that upside risk, you will see persistent dollar weakness heading into next year?
It's a tricky one, Lisa, because, you know, on the one hand, you've got kind of interest rate differentials driving some of those dollar moves clearly with the yen, balanced against the other side of flight to quality, which is the pure risk-off trade, is usually dollar strength. You go for the strongest institutional protection in terms of wealth, and so I think initially the move is much more about interest rate differentials, and that's why you're not seeing so much of the move on the dollar. I think it's too soon to say whether or not you're going to see a bid to the dollar from geopolitical risk. But I think if it was a larger issue that spreads, you're going to think more traditionally that's going to be dollar strength.
You got to jump, John, and gold up $41.
Got a big rally in the bond market too, and equities as well. Jeff, just final question before I go. There's people watching, listening to this program right now. They just want to know, can I buy the S&P 500 and take a vacation? Is there anything to worry about between now and September?
Well, you never want to say take a vacation.
No.
Buying equities, you've got some risk, but you take the totality of what the chairman went over. And this is a lot of good news. I mean, this is a chairman basically saying, without saying it, we've achieved the soft landing. That's a great outcome for the equity market. It's a great outcome for the economy. It's a great outcome more broadly. So I think that's the takeaway, and generally that's going to be pretty supportive. I think the other thing just to mention, obviously, you're not really buying the S&P 500. It's not the economy. It's a collection of stocks that has a very high weight to a secular technology theme, and that secular technology theme is playing out again today following Microsoft's earnings, and you're seeing a bid back to semis. So you've got like the micro story there a lot, as well as the policy story. And we got to keep that in mind when we're looking at this high frequency data. And if you're buying the S&P 500 with a very high historical share to tech, it's really also buying into that tech story as much as it is about the macro economy.
Just trying to take a vacation. Jeff, appreciate it. Jeff Rosenberg there, BlackRock. Jeff, thank you. Deeply thoughtful stuff. Going into payrolls on Friday. We should share with you the numbers that we're looking for on Friday. Just another sneak peek of the payrolls survey here at Bloomberg. The median estimate is 175 on Friday. The previous number, 206. Unemployment coming into focus much more for many of you, I know. So here's the estimate for unemployment, 4.1%, in line with the previous month of 4.1%, Lisa.
And the reason why it matters, that unemployment rate, possibly more than anything else, is because if it gets to 4.2%, it triggers a SOM rule. Bill Dudley talking about why that's important. At that point, historically, it becomes a self-reinforcing mechanism of weakness.
The difference is you and I are taking vacation like 18 hours. Pharaoh's taking 18 days. That's the difference here.
Actually, I'm missing Friday because I'm going to be on vacation.
Thank you.
You're missing job day? It's un-American.
It had to do with kids' schedules.
Look, as a manager here at Bloomberg.
Blame it on the kids.
As a manager here at Bloomberg.
Are you going to blame it on the kids?
I track everyone's vacation.
Oh, do you?
Absolutely.
Yeah, is that correct?
You've both taken much more than I have.
Oh,
okay?
please.
Just for the
Do you
record.
have a bar chart of it?
I do. At home, it's a spreadsheet. I load up the Bloomberg terminal and I monitor your vacation at the same time.
That's such productivity.
Missed this, haven't we? Appreciate it. It's good to see you, TK.
Yeah, please.
Thank you, sir. Lisa, thank you.
Thank you.
Are you going to bless us with some of your criticism of the Federal Reserve tomorrow?
Yes, I'm going to have commentary that blesses them very
line.
frequently.
Is there an
That was
auction
fantastic. No, but there
That's
is
the line of
plenty
the press
commentary.
conference. That really is. Coming up on the close, don't miss this. Stuart Kaiser of Citi, David Kirkpatrick of Techonomy, and a former Fed governor, Betsy Duke, as we round out the month of July from New York City. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. Tech surges, stocks rally, buy signals flash across Wall Street as traders grow optimistic that rate cuts are coming soon. This after Fed Chair Jay Powell left the door open to lowering borrowing costs at the central bank's next meeting in September.
The question will be whether the totality of the data, the evolving outlook, and the balance of risks are consistent with rising confidence on inflation and maintaining a solid labor market. If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September.
Fed Chair Jay Powell remarks carried live here on Bloomberg Radio. So with 13 minutes to go ahead of the closing bell, we've got the Dow Jones Industrial Average back above 41,000, 41,007 right now, up by about 0.7%, higher by 261 points. The S&P 500 index up 99, up 1.8%. The Nasdaq Composite Index up 485 points, up 2.8%. The Nasdaq 100 Index, by far the outperformer, up now by 3.2%. Broad-based rally with small caps advancing. Russell 2000 up by 1.2%. 10-year 4.06% with a 2-year 4.28%. Spot gold up 1.5%, 24.48 the ounce, and West Texas Intermediate crude up 5% now, 78.41 a barrel. After earnings, Microsoft down 1.2%. Advanced Micro Devices after earnings up 5%. And of course, the big earnings event after the close of trading, Meta Platforms up 2.3%. Bottom line, Fed Wednesday, stock surge, S&P up by 1.7%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. Live on radio, YouTube, Bloomberg Originals. This is Bloomberg Business Week on this Fed Wednesday, July 31st. This is our last day of July. It is our fifth Fed decision, and I feel like it is all about September. I feel like I heard Jay Powell
Is it
say
about September or is it
times.
about Jackson Hole?
No, well, I think maybe we get some clarity, but I feel like we heard Jay Powell. I kind of lost count of him saying
September.
Like it could happen as soon as September.
Yeah, that's. I mean, look, we saw an equity market reaction that certainly, and a bond market reaction too, that certainly bought into that. We just heard the numbers from Charlie, but still, the S&P 500 up 1.7% right now. The Dow up 0.5 percentage point, while the Nasdaq Composite up 2.7% off of earlier highs.
Yeah, absolutely. The other thing, let's throw into this, because we did get some headlines in terms of those tensions, war, that we continue to see out of the Middle East. Specifically, we did see oil jump above 4%, jumping the most since October after Hamas said Israel killed its political leader, stoking tensions in a region that produces around a third of the world's crude. What's interesting is that it sounds like Iran is getting ready to do a counterattack. So we are watching that very, very closely. But we're going to focus certainly on the Fed decision. And let's not forget another of the Mag 7 reporting after the closing bell, Meta Platforms.
Yeah, we'll bring those numbers to you as soon as we get them, including, too, Carol, an interview before that with the CEO of Connect One Bank Corp, Frank Sorrentino, who's going to be back with us. He's going to talk monetary policy and rates, small business activity, and the environment for lending.
It's a great lineup, folks. So let's get to it. Let's get to our drive to the close with about 11 minutes to go. Joining us right now is Nate Thuft. He is Chief Investment Officer over at Manulife Investment Management, joining us from Boston. And then right here in our Bloomberg Interactive studio, our own Bloomberg News rates reporter, Michael McKenzie. Michael, I want to start with you. The Fed decision, was there more of a hawkish tone or more of a dovish tone? It did feel like rates all along the U.S. curve moved up a little bit initially on the decision.
They did, Carol. I think initially the statement was viewed as being a little bit more hawkish than anticipated. And then Powell began talking. And as he slowly but surely continued on and was asked more questions, he started peppering his conversation with expressions like, there's real downside risk to labor. He talked about we're nearly going to go. He kept mentioning September.
Yeah.
And
I lost count of how many times I felt like he said
September. And I think
and
you could start to see, we saw the 5-year make a new yield low for the day, below 3.99. And then once the press conference finished, the market really took off, on those Iran headlines, I think, but also because it's month end and people now need to buy bonds. So I think they were waiting to see what was happening, what Powell would say. But I think the broad takeaway for the market here is he's put September clearly on the table. He did mention, actually, that they did discuss a rate decision for July.
I also thought that was
which also got the market kind of go, oh, here we go.
Yeah.
And I think, and if you look more out over the next 12 months, the market's gone from pricing about 150 basis points of cuts to 160 now. So they're ready to go.
Okay, he did mention September quite a bit, Michael, but he also said we've made no decisions about future meetings, and that includes September. We will be data dependent, but not data point dependent.
Yeah, that was an interesting. He tried. I think that was a shot across the bow of the bond market. With the totality of data. But here's the bond market perspective. Inflation is moving in the right direction. You've mentioned labor weakness is potentially the big downside source of risk here. The next two payroll reports matter a great deal, particularly after what we've seen this week from the Employment Cost Index, what we've seen from ADP today, and what we saw from the JOLTS.
Right.
So everything's lined up, but again, you need to see a materially weaker number over the next 2 months in payrolls to get this.
I just want to remind everyone listening, Michael McKenzie told us this last week. So we knew this was coming, Michael, and you have not shifted your view on it.
Well, I'm just reflecting what people, a lot of smarter people tell me every day.
That's why he's become kind of a member of our team.
He's a
go-to,
no question.
All right, let's go to Nate right now, Chief Investment Officer at Manulife Investment Management, Nate Thuft, out there in Boston. Nate, what jumps out for you in terms of today's Fed decision?
Yeah, what I was surprised by, obviously the market had priced in a lot for this in anticipation of a fairly dovish statement in my view. And I actually interpreted it as pretty dovish. Basically, every edit they made in the statement was leaning towards a dovish outcome. Now, could have they phrased it slightly differently to get it across? But at the end of the day, Powell did reassert it during his comments, basically saying, hey, September is live. Of course, we're going to talk about it. And the fact that you pointed out that they actually had the discussion at the July meeting as to whether they should make a cut, I think is an important telltale that the committee overall is definitely leaning towards wanting to make a cut, assuming, again, that the data continues to come in with a level of respectableness when it comes to the weakness on the lower side of inflation and also potentially getting continuation of some of the labor weakness that we've been seeing. So we firmly believe that September is live and we will get a 25 basis point cut. We're also in the camp that we could still see as many as 3 quarter-point cuts before the end of 2024.
Okay, that's quite a few. Nate, what derails a September rate cut between now and then?
Well, obviously the Fed is data dependent. They always have been and always will be. And I think it's important that they point out that they're not data point dependent versus broadly data dependent, because I think the trends matter more than any given data print. And it opens a window for them to have a little bit of flexibility around one bad data point or 2 bad data points by saying, hey, we're still looking at the overall trend. And so obviously, if we get really hot jobs data coming in the next 2 months, or we get a surprise uptick in inflation, which I think would be very surprising based on the data that we're seeing, that you would see that, but that could derail or delay the potential for a quarter-point cut at the September meeting. So it really is a much hotter data when it comes to the job market and obviously inflation taking a reverse turn and going higher again.
Well, so it's interesting, Michael McKenzie, I do wonder, too, that what Jay Powell also said is that there's a ton of data between now and the September meeting, and we shouldn't forget about that. Is it just reminding him that he's just going to go through it all, even though he kind of dropped September many times?
Yeah, and I think also what was one of the more interesting lines he said was he was asked about rate cuts for this year, and he said he could see scenarios where you could have 0 or several.
Yeah.
And what the bond market really listened to, they didn't listen to 0, they listened to several, which means more than 2. And I think that was where the rally begins to get going here. I think this is a Fed that is leaning towards... And you said there's a rally in the bond market because people are saying, okay, we've topped out. We're going in terms of rates. So I'm going to, or what? Well, it's a rally because we're now at a stage where the cycle is turning. Mm-hmm. We're late cycle. And the Fed is about to cut. And if the Fed's about to cut, then the classic bond trade here is to get into the 2-year to 5-year. You're going to have to pay up to get in there now, but you're getting in there now because you know there's a wall of money sitting in T-bills that is going to come following you. And this thing could really shoot lower to the downside here in terms of rates before it's all ended. But so now there's a premium to be paid, and you're going to buy 2s and you're going to buy 5s, and the Fed's telling you they're ready to go. And it's just going to take a further softening in labor. They will cut in September. The question whether they cut more remains to be seen. But
meaning they could do 50?
Well, or not if they do 3 cuts this year.
Oh, okay.
I think Powell ruled out. You'd have to have something materially weaken dramatically in the next 2 months.
You're just saying more frequency.
More frequency.
Hey, Nate, investors are not just focused on Jay Powell and the Federal Reserve and the data that we're going to get on Friday when it comes to the labor market. We did see stocks move lower after the New York Times reported that Iran's leader has ordered a direct strike on Israel in retaliation for what it said was the assassination of Hamas's top leader while in Tehran, this according to the New York Times. How are you watching this as CIO at Manulife Investment Management? Just very briefly.
I do believe that the market is underappreciating these risks. And keep in mind, there are a lot of risks out there. We have election risk dynamics that we've seen throughout this year, and there's more to come. We have geopolitical risks in the Middle East. And so I think the market is underappreciating the risk. And so one of the areas that we are focused on to potentially offset that is we are trying to add to our duration, both because of the Fed cutting cycle will begin, but also that there are these risks out there. So we're adding to duration in our portfolios. But similarly, we are trying to own some of these asset classes like energy where we'll benefit from more geopolitical risk.
For what it's worth, I did a little poll this morning. What's top of mind? Fed, earnings, U.S. politics, geopolitics. Fed was 34%, but in second place at 30% was geopolitics in terms of what's on everybody's mind. People also said getting a second cup of coffee and watching the Olympics, but that was add-on.
Was that? Yeah, that was not. Those were write-ins.
Yeah, but I gave them four choices.
Okay.
Michael McKenzie, always appreciate your instant analysis. Rates reporter at Bloomberg News here in our studio. Nate Thuth, thank you so much as well. CIO over at Manulife Investment Management out there in Boston. Folks, don't go anywhere. At the closing bell, we're counting you down on this Fed Wednesday.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele here to help take you through the Closing Bell, a global simulcast. It starts right now with Scarlett Fu alongside us in the television studio, Carol Master and Tim Stenovic in the radio booth as we welcome our audiences across all of our platforms, including our partnership with YouTube, a day where we're looking at an S&P having its best day since February of this year, the NASDAQ 100, Carol, having its best day since February of last year.
I don't know about you guys, but I lost count of how many times Fed Chair Jay Powell said September, and I feel like that specificity was so important and
I know,
a key
I thought
takeaway.
at some point like Earth, Wind, and Fire was just going to like pop out.
I love that you think that way. Cue the song, cue the song.
Okay, though to be fair, he did say we've made no decisions about future meetings, and it includes September. Will be data dependent, but not data point dependent. I didn't hear September in that part.
Yeah, I'm just going to say.
Yeah, no, I mean, they're setting it. I mean, I think the question is, are they dragging their feet or are they taking baby steps? And how you kind of look at that. I saw notes from a lot of economists referring to either one of those.
Well, I mean, he needs to create room for optionality, and he certainly gets that with Jackson Hole in late August. So you wonder how much they're going to say September and Jackson Hole as well.
It'll be interesting to see whether he uses that platform. It's kind of interesting. We heard from Bill Dudley during the Fed special. He kind of talked about this idea here that if the Fed does indeed cut that first rate cut, he thinks they have to keep going. They can't do like what you're seeing over there in the ECB as sort of do one and then wait. That if this is going to be an easing cycle, in his words, it needs to be an actual cycle.
And he said several, right? Like he said the word several.
Yeah.
So it just depends on what the word several actually means. Is that 7 or is that more like 3 or 4?
The next meeting, of course, September 17th, 18th. Apologies, Earth, Wind, and Fire, that it did not schedule it for the 21st. We get the closing bells here in New York on this Fed day, Wednesday here, with a lot of earnings set to cross the wire. Dow Jones Industrial Average up 100 points or 0.2%. The S&P 500 up about 1.6%, while the NASDAQ Composite higher by 2.6%, and the Russell 2000 also in the green by about 0.5%. Carol.
All right, folks, let's get to Qualcomm earnings. Great read on certainly the smartphone market. So let's get to it. Let's get to the outlook. Fourth quarter revenue, $9.5 billion to $10.3 billion. So kicking it up, the estimate on the street is $9.7 billion. Fourth quarter adjusted EPS, $2.45 a share to $2.65. The estimate is $2.45. So again, upping both the top and bottom line. Go backwards. Third quarter adjusted revenue, $9.39 billion. That's a beat versus the estimate of $9.21 billion on the street. And third quarter adjusted EPS, $2.33 a share. That's 9 pennies better than what the street was expecting. And that stock you're seeing up 2-3% here in the aftermarket.
Yeah, certainly waiting for some commentary. The company has not updated its financial results on the website yet, so we don't have the press release. But it does see fourth quarter revenue 9.5 to 10.3 billion. Estimates for 9.7 billion. Shares up by 5.3%.
And just quick mention here with NVIDIA's move today, it was the biggest gainer in the NASDAQ 100 on that positive note out of Morgan Stanley. It added $329 billion in value today. That is the most in market history, $329 billion.
Yeah, I was looking at the Philadelphia Semiconductor Index earlier today, and up the most going back to late 2022. Everything in there other than Skyworks and Energis were in the green, and solidly in the green too.
Yeah, well, batch of semiconductor, right? ASML getting a boost, right? There's some exemptions maybe when it comes to some of the chip equipment makers. ADM, Advanced AMD rather, Advanced Micro Devices, right? Also their report upbeat in terms of their forecast. So there was a lot of news, I felt like, in the chip space.
Intel making some big news yesterday with layoffs. So, yeah.
And it'll be interesting, too. We get Intel reporting tomorrow, too. So maybe some of that gloom and doom or these doubts here about some of these chip companies, maybe they'll start to ratify some of those valuations. In fact, we're getting more earnings right now out of ARM Holdings, too. Of course, a big one there with that company providing guidance, saying that revenue for the quarter going to come in at about $780 to $830 million. So basically a preview here of that second quarter. And the revenue in the most recent quarter, the past first quarter, the fiscal first quarter, a beat there as well. 939 million. Street was looking for 906.
Yeah, that's a pretty incredible number. Also, just go back to Qualcomm for a moment. They're taking a look at that fourth quarter revenue on the high end of $10.3 billion. That beats estimates. Also taking a look at the individual segments, right? You have QCT, which is basically what they make for their phone chips. That's coming in quite strong on the high end of about $8.7 billion for the fourth quarter. So these are solid numbers when it comes to guidance. Their licensing revenue also on the high end, coming at $1.55 billion on the high end for the fourth quarter.
You know, a lot of it will depend on what they say also in the conference call about their outlook for the following fiscal year, because that's when Apple's new generation of iPhones come in and the refresh cycle that's supposed to take place there. They're going to provide a really important read on demand from Apple.
Is this new phone? Is this the one that folds?
No,
this
not
is
yet.
just AI stuff.
Oh.
No.
You're looking forward to that one? You want the fold
You got to
thing?
wait a few years for that
over
one.
folding.
Samsung does have a folding phone out.
I've heard, yeah.
Apple, not yet.
Yeah, wonderful.
If that happens.
Yeah.
If that happens.
If it happens. But it will be AI capable, right?
We're also going to look
phone,
for
yeah.
we're going to look for some commentary out of Qualcomm in terms of China specifically, also AI. Certainly, that's an aspect for them. But this is, you know, we've seen in terms of some of the phone market and the handset market some weakness. So we're looking, you know, for more commentary about kind of demand later in this year and what it says about maybe the strength or the comeback, if you will. But you are seeing Qualcomm now, guys, up about 7% here in the aftermarket. This is building on a more than 20% gain here in 2024.
Yeah, they did update at Investor Relations website, so I am able to look through the press release. Cristiano Amon said that third quarter results reflect strong execution of our growth and diversification strategy. With QCT quarterly revenues and EBT margins the high end of guidance, we're excited about the launch of Snapdragon Series X solutions for PCs and personalized AI experiences. It represents a significant milestone in our transformation from a communications company to a leading intelligent computing company.
I am curious to see how they articulate their longer-term future, particularly given all the reporting we've done at Bloomberg about Apple trying to basically distance itself from Qualcomm with its own chips and things. And obviously that's been pushed back, according to Mark Gurman. But at some point, this is something that Qualcomm is going to have to confront head on.
I just want to hit on ARM Holdings just for a moment here. So just a reminder, their first quarter results came in about 40 cents a share. That beat their revenue, also beat their second quarter forecast. I mean, it looks pretty solid on an adjusted earnings basis. The high end just met in terms of revenue. They see on the high end of $830 million. You look at the operating expenses, though, that could be higher than estimated, coming in at $500 million versus $472.7 million. So note on that, that stock is down 5%.
Okay, we just got earnings out of Meta, so let's take a look at second quarter numbers here. Meta Platform second quarter family of apps revenue, that's the biggest part of its business, $38.7 billion, better than what analysts had expected. The platform's second quarter Reality Labs, a small part of its business, $353 million, missing the average analyst estimate of $376.9 million. As for the second quarter revenue overall, 39.07, beating the consensus estimate of 38.34, and the outlook for this quarter revenue, $38.5 billion to $41 billion. Analysts were looking for $39.16 billion, and capex for the full year, $37 billion to $40 billion. It had previously seen $35 billion to $40 billion. Analysts were looking for somewhere in the middle of the lower end of that range, $37.5 billion. So like all the other big tech companies, Carol, increasing its spending here.
Well, and this is going to be potentially worrisome, right? When they talked about it last time, we saw certainly the stock take a hit. So giving some clarification around it, but it's not like they're reining it in. The street was looking for it to maybe pull it in even more. If you look at the top end, they're saying it could go to as much as, for the fiscal year, up to $40 billion. The estimate on the street was below that by about $2.5 billion. So we're looking at Meta Platforms volumes, though, up 8% here in the aftermarket. Also talking about fiscal year total expenses, 96 to 99 billion, a bit of a gap there. The street estimate is 97.73. So again, that can be on the higher end. But again, right now, Wall Street seems to be taking it in stride here.
I think it's notable what Mark Zuckerberg said in the press release, that he led with AI. He doesn't talk about the family of apps and the record revenue that they had there. He said we had a strong quarter. Meta AI is on track to be the most used AI assistant in the world by the end of the year. We've released the first frontier level open source AI model. We continue to see good traction with our Ray-Ban Meta AI glasses, and we're driving good growth across our apps. So he does mention the apps there, but he mentions the Ray-Bans before the apps there. I mean, that's like a tiny part of their business, but maybe that's where he sees the growth of the company.
Maybe that's where he does see the growth, and of course that feeds the conspiracy theories about those tan lines that we were talking about last week.
I knew you were going to bring that up.
Kind of interesting as well, too, when we talk about CapEx, how that CapEx spend basically staying in line with estimates for 2024, a ramp up in 2025. But I thought it was also interesting, too. I was looking at some of the ad numbers here, and ad impressions coming in, growth of about 10%, which was slightly below what the street was looking for, and a huge drop from the prior quarter a year ago, when we had about 34% growth, though. That was probably a bit of an outlier.
I just want to highlight for a second the Reality Labs thing. So Reality Labs is saying operating losses will continue for 2024. Their operating loss for the second quarter came in at $4.49 billion. So just to contrast the fact that that area of their segment, right, their virtual reality is losing billions of dollars. It will continue to lose billions of dollars this year, yet CapEx will still be on that high end of $40 billion. How do you reconcile that as a shareholder?
Is it maybe because but the quarter that I just reported on, maybe because there are some beats there, and so maybe they think that they can manage the expectations? It's pretty kind of mind-blowing, because I would have anticipated that the stock would have traded lower on all of those costs. Right now, Meta is up about 5% here. You've got Qualcomm up about 4.7% in the aftermarket. ARM holding down 7%. Etsy also out, and it's gaining about 2.9% in the aftermarket. So a big drop of earnings. All right, guys, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We will see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. Shares of Meta Platforms bouncing around, but up about 5% in the after hours. Now, the company did report second quarter revenue that beat estimates. Revenue coming in at $39.07 billion. That's a 22% year-over-year increase, beating estimates of $38.34 billion. And that family of apps revenue, that is the core business, $38.72 billion in the quarter, up 22%. Estimate was for $37.76. Carol highlighted the CapEx. The company's seeing total CapEx $37 to $40 billion, where investors saw $35 to $40 billion. The estimate was for $37.53 billion. So, again, what we saw from Microsoft and what we saw from Alphabet.
Here's what I'm going to say. Their bread and butter is advertising. They did report better than the sales for the second quarter. So, again, our right-through, I'm looking at Kurt Wagner, offering evidence that the company's heavy investments in AI are helping it sell more targeted and personalized advertisements. That is still their bread and butter. So if they are saying, we are spending, guys, and we're going to spend even more, but look at the results from the past quarter. And that's where I'm trying to make sense of the stock being up here in the aftermarket, up 5%. It's not like people are saying, oh my God, what are you spending all this money on?
You all thought that AI was going to make our jobs easier, when in reality, it just makes Facebook better at targeting ads to you.
Yeah, right? So, yeah, well done, Meta. All right, so let's get to it. Our team coverage with Bloomberg News contributor John Ehrlichman joining us from Toronto, along with Bloomberg News social media reporter Aisha Counts joining us in Chicago. Aisha, I want to start with you. How did Meta do?
I mean, I think you said it earlier, they beat on everything, right? The revenue beat expectations, actually the top end of what analysts expected. And they also beat on the amount of users that they have. I mean, they beat in every dimension. Now, the one thing you did mention, right, was that CapEx, which is that spending, a lot of which is going to things like AI infrastructure. You're talking servers and data and hardware and stuff like that. That increased a little bit, but because it was that bottom range, right, like their top line level didn't increase, I don't think investors are going to be that upset about that. So yeah, they beat on everything, changed a couple things, but I think overall it's good for them.
Hey, John, what sticks out to you here? You've had a few minutes to go over these numbers. What sticks out to you?
Just, Tim, that Mark Zuckerberg and Meta seem to have the script down pretty cold at this point. I mean, building on everything you've said, here is a company that over the last couple of years has learned its lessons when it comes to what starts to make Wall Street uncomfortable on the spending front. And I think that the fact that as you guys highlighted earlier, that they can make the case that the revenue that came in stronger than expected gets assistance from the investment that's coming from all this AI focus, that seems to be a helping hand here. I would add, though, that if you go back to the last quarter, remember, and by the way, this stock always moves a lot. Generally, it moves a lot after earnings, either up or down. But the shares got crushed because investors had to do another reassessment on this AI spending. So arguably, we've had some time to sit with this. And even the stock price, I know it's up a lot this year, but at last check, it was coming into this earnings report a little bit lower than where it was heading into the last quarter. So I don't think anyone would have been surprised to see a big spending bill, but you have stronger than expected numbers. And remember, this is also the company that's starting to find shareholder-friendly tricks in its playbook. They issued their first dividend, and they're buying back a lot of stock, so they've got the levers they can pull. But we still have to see how all this AI spending nets out in the long term. We don't quite know, but they're trying to paint a good picture so far.
Yeah, and for a stock that bopped up, I think, about 10% here in the aftermarket, we're now just up about 3.6%, still higher, but it continues as I think investors and analysts continue to go through the report, and we'll wait to see what comes out on the call. Having said that, John, how does Meta square with some of the other companies that we are so intently focused on their AI spending and their AI ROI, return on investment?
You know, everybody is in an arms race here, and I think at the end of the day, Carol, you could make an argument that because Alphabet came first and investors got a little jittery on the roadmap for the spending on AI and the return on investment, remember that coming into this week, tech had been pretty roughed up. So it almost, dare I say, set the bar lower for the tech giants that would be putting out numbers this week. I think that at the end of the day, longer term, and Mark Zuckerberg said it himself in his interview with Emily Chang not that long ago, there is a possibility that all the spending they are doing today might be an overshoot, but they're right now trying to build a future where engagement can be increased through AI, that advertisers can have better, more targeted ads through AI, that they can have a much cleaner thread between software and hardware, like the glasses you're talking about. I think they really like where this story is going over the long term. They're probably getting a boost as well, just because there's a lot of eyeballs on big events right now, like the Olympics, and so they can benefit from that. But there's, you know, the other side of AI that we don't know a lot about. Mark Zuckerberg spent a lot of time in front of lawmakers in Washington over the last decade. People are still a little concerned, maybe more than a little concerned, about the ramifications of all this AI technology that they're weaving into the Meta ecosystem. But, you know, at the end of the day, if they can keep the bottom line in a relatively clean manner and keep growing the revenue story, you know, Meta is in a position to have arguably a cleaner quarterly story than some of its peers.
Aisha, can you talk a little bit about the integration of Llama and AI into Meta Platform's family of apps? You know, Carol and I were joking about the idea of the result of all this investment in AI is just better targeted ads.
It's funny because Meta is one of those companies where the AI is all behind the scenes, right? So obviously they've been using AI for years, for decades, to recommend content on your feed, whether that's on Instagram or Facebook, whether that's posted images or videos. And so a lot of it goes towards that. But then they've also released new products like AI chatbot that you can talk to, right? So Meta AI, if you go on Instagram or Facebook, it'll pop up and you can ask it questions and things like that. And so you see some product experiences. They also had rolled out some things like celebrity chatbots, so you could chat with a chatbot that looked and sounded like, you know, Tom Brady, for example.
I knew you were going to say Tom Brady.
Yeah, they
It's
recently shut
I remember he
it.
showed that off, right?
Yeah, they showed that off, but then they shuttered it recently, and so it's like, how much are those products and services really moving the needle for them, or is it really just, again, like you're saying, going back to the core advertising business, going back to the feed, and how do they recommend content that users actually want to watch and view?
Can I help me out here? Is there something in this release that shows specifically, is there a number or something that says, yep, here's our AI investing and here's how it paid off? I mean, or John, do we just assume that if the revenues is beating, that it's because of AI spending? You know what I mean?
Yeah, I absolutely know what you mean. I mean, the first line in the press release itself was really trying to talk more about how AI is complementing the hardware that they've got.
Yeah.
And that might just speak to the fact that go back a couple of years ago, as we were just highlighting, like AI is technically not a new thing for the company, but it is the hot thing for the world to talk about. So it is front and center right now, but a couple of years ago, what was front and center was quite literally changing the name from Facebook to Meta and talking about the metaverse and talking about, all their VR and AR opportunities. And so I think that there is still, because of the explosive spending in that area, maybe this is Mark Zuckerberg just wanting to put a pin in the fact that they can actually make all of this sing together. I would imagine, Carol, you get more color on how they're connecting the advertising dots on the quarterly conference call. But the revenue growing, I think already analysts in reaction to this, as Bloomberg is reporting, are suggesting that is the case.
Listen, both of you, thank you so much. Bloomberg News contributor John Ehrlichman out there in Toronto. Bloomberg News social media reporter Aisha Counts in Chicago. Shares of Meta, Tim, right now up 5.4%.
Coming up, Frank Sorrentino, Connect One Bank. That's next.
4:21 on Wall Street. We do check markets all day long here at Bloomberg. Fed Wednesday, stock surge, a flood of earnings after hours. Let's get right to Meta Platforms. As we've been telling you, it did report better than expected sales for the second quarter, offering evidence that the company's heavy investments in AI are helping it sell more targeted and personalized ads. After hours right now, we got Meta Platforms up by just about 5.1%. Also reporting after hours, Qualcomm. It is the world's biggest seller of smartphone processors. It gave a strong revenue forecast for the current period, indicating the demand for phones is rebounding. After hours, Qualcomm right now up by 6.2%. eBay forecasts net revenue for the third quarter of $2.5 billion to $2.56 billion. eBay after hours up now by 1.3%. Also reporting, ARM Holdings. It's out with earnings that handily beat analyst estimates with its quarterly results, but it did hold off on boosting its annual forecast. ARM right now down by 9.3%. And finally, Carvana. It reported stronger vehicle sales and revenue than Wall Street expected in the second quarter, pushing the used car retailer to a surprise profit. Carvana right now up by 5.2%. Big day for the U.S. stock market. Wall Street was cheering what they heard from Fed Chair Jay Powell. The Dow up 99 points, up 0.2%. Powell saying the Fed could cut rates as soon as the September meeting. S&P up 1.6%, up 85. NASDAQ up 2.6%. 10-year 4.04% with a 2-year 4.26%. Gold up 1.6%, 24.48 the ounce. West Texas Intermediate crude up 5%, 78.48 a barrel. Lots going on today. And again, recapping, S&P up 1.6%, 10-year 4.04%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, everybody, you are listening and watching Bloomberg Business Week. Carol Massar along with Tim Stanovic. Well, as Romaine Bostick said, cue Earth, Wind, and Fire. Fed Chair Jay Powell saying an interest rate cut could come as soon as the next meeting after the U.S. Central Bank voted to leave its benchmark at the highest level in more than 2 decades. That was widely expected. Here's what Jay Powell had to say today.
Whether the totality of the data, the evolving outlook, and the balance of risks are consistent with rising confidence on inflation and maintaining a solid labor market. If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September.
All right, everybody, sing some Earth, Wind, and Fire.
Could be on the table.
You said September an awful lot.
Yeah, not is on the table, but could be.
Could be. But like I said, I lost count of how many times he said September.
Well, with more on today's decision and Jay Powell commentary, let's head to a member of the banking community, always sensitive to Fed moves. Back with us, a guest who's continued to remind us since late last year about the, quote, robust parts of our economy, even when others were talking about a possible recession, and also to remind us that historically interest rates are still low.
Perspective and context. That guest, Frank Sorrentino, Chairman and CEO over at Connect One Bank, the publicly held New Jersey-based community bank. It's got about a $930 million market cap. He joins us from Englewood, New Jersey, where I was born, Englewood. Frank Sorrentino, great to have you back with us. First of all, I have to...
Great to be back, Carol and Tim.
When we were prepping for this, Tim and I, remembered that the last time we talked, your market cap was about $677 million. We were looking at our old notes. It's now dramatically higher. Your stock is up about 40% since we last talked after the June Fed meeting.
It's like 6 weeks ago.
It's unbelievable. What has happened?
Well, I think part of it is just a sector rotation into banks, right? Banks have been really pummeled over the last, I'll say, 6 months, 9 months or so. And I think when folks investors look out over the next 6 or 9 months, they're absolutely seeing that banks are going to begin earning at higher levels in general. Lower rates will help with that, more liquidity in the marketplace, and I know I've used the word robust, but a robust economy where lending takes place again. We're beginning to see banks making more loans over time.
I have to say, if I look at the KBW Bank Index, which is a broader measure of the banking sector, it's only up about 14% in that time. I mean, you guys aren't in play or anything, right? There's nothing you want to share with us?
Nothing I want to share, of course. Connect One's doing a great job of satisfying its clients' demands here. And, we are a little bit unique that we're centrally located here in the New York metro market. And so anybody looking for a play in what I believe is one of the best markets in the country in our size range, well, Connect One's the place.
Oh, interesting. Okay, so wait, you are
in play?
What do you mean?
Wait.
What do you mean?
No, I'm just saying anyone who's looking to invest in the New York metro market area in banking, we're one of the names that'll come up. Right?
Okay, not necessarily a larger bank coming in and gobbling you up.
No. I just meant anybody who makes investments in banks.
Okay.
And in their stocks.
Okay, let's get to the Fed a little bit because we last talked to you following that FOMC decision in June. We got another one on the books. What was of note to you in the Fed commentary and especially in Jay Powell's press conference today?
Look, I think Jay Powell and the Fed have been very consistent about looking at the data, looking ahead, thinking about how to land this, where we are today. I think we pretty much have in the books a soft landing. We've been talking about it for over a year. It looks like that is exactly what's going to happen. Consumer is still spending. People still have their jobs. Inflation is coming down. Things are normalizing again. We are, as I've mentioned before, yes, in a higher rate environment, but not a high rate environment. Business is still taking place. Folks are pretty much doing all the things they want to do. You still can't get a house or an apartment that you want. The demand is there. So I think they're looking at the data and saying, okay, things have come off the high. So we don't see as much positive momentum in the market as we saw before, but it's still a robust market. So yes, I think we will see time for the overnight rate to come down a little bit. We are in an inverted yield scenario, but the 10-year is still at over 4%. So I think we're in a good place, and I think they believe they can lower rates a little bit, which would be great for banking. And it'll be great for the economy going forward.
Well, give us a little bit more color, if you can, around your loan book, what it looks like, whether it's for small business, for the housing area, the construction. What can you tell us?
Yeah, so we're a community bank here in the New York metro market. That's New Jersey, New York, and we're also in Southeast Florida. A lot of our lending is to small to medium-sized businesses. We do a fair amount of construction lending, and I will tell you that is still quite robust. As fast as projects can be built, they're either being rented or sold. There's probably more demand than the supply. I've said before that, nationwide, there's just a shortage of supply. So that's one segment we do. We do a fair amount in the real estate industries, and we do a fair amount in just business type loans. We're not a big consumer lender, but for the businesses that bank with us, we are seeing that most of them are doing well. Yes, a little bit less than maybe a year ago or 2 years ago, but still doing quite well.
Hey, politics has been front and center since we last spoke to you, with a lot happening, not just in Washington, but all over the country. And I'm wondering, Frank, how you're feeling about who occupies the White House come January of next year. Is one candidate better for your business and your customers than another candidate?
Well, I think if we polled all of our clients, we would have a very varied opinion about that. I would say to you that, one of the great things about our country is no matter who occupies the presidency or any of the national level offices, we always seem to do well. And so I have the utmost confidence that the electorate will make the right decision, and we'll live with whatever the choices are at that time. And we've done incredibly well under administrations from both political parties. So I don't spend a whole lot of time thinking about that.
Interesting. What about, though, something you probably do think about is obviously Fed policy, which is why we'd love to talk to you about it. Jay Powell, whether or not he continues as Fed chair. I know Donald Trump, in an interview with our Bloomberg Business Week team, has talked about that he might consider keeping Jay Powell around. How do you think about that in terms of a new Fed chair and maybe, it takes a while for someone to get a little bit acclimated maybe to the job. Is that something that you think about, maybe, or a little concerned about in terms of that November outcome?
Look, I think the independence of the Fed is an incredibly important part of our economy and the way it works and how our central bank system works. I think Jay Powell, for the most part, you'd have to say, has done a good job. There are those who would say he was a little slow on the switch to, raise rates at the appropriate time. But I have to tell you, that was a point in time when no one really knew where we were going, or what the impacts of this global pandemic were going to look like. So, okay, maybe he didn't get that perfectly right, but all the rest of the decisioning, both of Jay Powell and the entire Fed Board of Governors, you have to say, has been pretty much spot on. And they've been dealing with this inflation environment quite well. I'm happy to see him, play out the rest of his term for I guess it's the next 2 years or so.
Yeah.
And I'm confident we'll have the right Fed governor in place, irregardless of what administration takes over in November, and that the Federal Reserve itself maintains its independence. And yes, it is an incredibly important part of our economy.
Yeah, most people would agree with you, no doubt about that. Frank Sorrentino, thank you as always. Always appreciate getting some time with you, especially when it comes to Fed policy and after decision. Really helpful for us. Frank Sorrentino, Chairman and CEO over at Connect One Bank.
I think last time he was on with us, we were waiting on a political speech that was very, very delayed. And
yeah,
Frank came on after being so patient, and we had him for like 2 minutes, and then we had to leave.
We got a lot out of him.
Thanks
though.
for coming back, Frank. Do appreciate it.
Be well.
Hey, let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in D.C. Hey, Amy.
Hi, Tim. We're getting word from the New York Times that Iran's supreme leader has ordered a retaliation against Israel after that humiliating security failure. Ayatollah Ali Khamenei has issued an order for Iran to strike Israel directly in retaliation for the killing in Tehran of Hamas's leader. It is not clear how forcefully Iran will respond. Israel has not claimed responsibility for that deadly strike in Tehran. Kamala Harris has wiped out Donald Trump's lead in the 7 battleground states that could decide the 2024 election. The latest Bloomberg News Morning Consult poll has the race still at a dead heat, with Harris ahead of Trump by 1%. But Bloomberg's Nancy Cook explains that this is starting to look like a trend.
I think that we saw former President Donald Trump be super dominant the first half of this year. And I think that what we're seeing now, based on our poll, but also other polls, is that Harris is going to give him, I think, much more of a run for his money than Biden did.
Bloomberg's Nancy Cook in Washington. Former President Donald Trump in Chicago at the National Association of Black Journalists said during a roundtable discussion about race in America that he questions Vice President Kamala Harris's racial identity.
She was always of Indian heritage, and she was only promoting Indian heritage. I didn't know she was Black until a number of years ago when she happened to turn Black, and now she wants to be known as Black. So I don't know, is she Indian or is she Black?
Trump also defended old comments from his running mate, Senator J.D. Vance, that disparaged women without children as childless cat ladies, saying it was meant in a friendly manner. We're also keeping track of the medal count in the Paris Summer Games. The U.S. out in front with 30 medals. France has 25, Great Britain has 18, and China has the most gold medals with 8. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
4:40 on Wall Street. We do check markets all day long here at Bloomberg. Meta platform shares higher after hours, up now by roughly 4%. It did report better than expected sales for the second quarter, offering evidence that the company's heavy investments in artificial intelligence are helping it sell more targeted and personalized ads. Again, after hours, we do have Meta platform shares. They're now higher by just about 3.8%. Big day for the stock market, a Fed Wednesday. Dovish comments from Fed Chair Jay Powell helped extend a rally in stocks that started with a surge in key tech companies, with the market scoring its best Federal Reserve day in 2 years. Right to the numbers, S&P 500 index up 85, up 1.6%. Dow Jones Industrial Average 40,842, up 99 points today, up 0.2%. NASDAQ was up 451 points, up 2.6%. NASDAQ 100 index higher today by 3%. 10-year 4.03%, the 2-year 4.25%. Spot gold up 1.6%, 24.48 the ounce, while West Texas Intermediate crude surged today. WTI was up today by just about 5%. So it was an up day today for the Dow, the S&P, and NASDAQ. Stocks did move higher. As for the Federal Reserve and markets, Nat Thuft is Chief Investment Officer at Manulife Investment Management, and he was a guest right here on Bloomberg Business Week.
We firmly believe that September is live and we will get a 25 basis point cut. We're also in the camp that we could still see as many as 3 quarter-point cuts before the end of 2024.
Nat Thuft of Manulife Investment Management. So again, recapping, stocks higher, S&P today up 85, a gain of 1.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Listen, we had a big batch of semiconductor news today. I'm looking at the stocks. There are 30 names. 28 were higher in today's session, 2 lower. NVIDIA was up about 13%. ASML was up about 9%. I mean, we had everything, some good, some bad, and then some more good news, Tim.
It's a good/bad depending on what audience you are, right?
Yeah.
If you're an Intel employee whose job is
Not
getting
so
cut,
good.
that's not good news. But if you're an investor looking for cost cuts, then that is good news. AMD's quarterly beat, bullish forecast, and upbeat analyst commentary around its AI accelerator. And then did you say about talk about ASML?
I did.
Yeah.
I mean, even Intel was up 2% today, but that unfortunately sometimes happens when you announce job cuts.
NVIDIA as well. Okay, so a lot in the semi space. Let's get to it with the co-host of Bloomberg Technology on Bloomberg TV, Ed Ludlow. He's here in our Bloomberg Interactive Brokers studio. Of all the chip stories that have broken in the last 24 hours, Ed, which one is the most important one for our audience to pay attention to?
We should put out, we had ARM Holding after the close, we had Qualcomm after the close.
I don't really know where to start. I mean, let's start probably with AMD, because I think there's probably the most read across to everyone else. It's probably easier. And AMD is a very distant second player in the market for AI accelerators. And it basically makes the same thing that NVIDIA does, a high-performance GPU to train AI models. And the single data point is they thought they'd sell $4 billion worth of them this year. Now they're saying $4.5 billion. So there are two ways of looking at it. Either they're chipping away at a market where NVIDIA absolutely dominates and might do $100 billion, and good for them, and good for NVIDIA.
And just remember the difference, 4.5 versus 100 billion.
Right, or you extrapolate out and say, what does this tell us about the broader environment, the so-called investment cycle? The commentary from AMD was very bullish that all of the money being spent on these GPUs that go into data centers is going to continue for some time. The gain in NVIDIA, which we can talk about, is historic. It's a big moment in our careers, actually, you know, covering equity markets, let alone technology. But I think a big part of that was the read-through from AMD, as well as I think you probably saw the Morgan Stanley note. That NVIDIA is the top pick in there.
Regaining it again.
Yes, regaining it, exactly.
Did it also help, though, that Microsoft, who has a very special relationship with NVIDIA,
yes,
in terms of buying chips and so on and so forth, like that they were talking about increasing CapEx, right? And NVIDIA benefits.
Long story short, yes.
Yeah.
I mean, I don't know if we're going to talk about Meta, but
wherever you want to go.
Well, so Meta, we can get into their numbers. They once again raised the range for their guidance to CapEx.
Yeah.
When I cover technology earnings, I always go back and look what happened the prior quarter. Meta raised its capex guidance last quarter, and what happened the next day? The stock fell by 16%.
Yeah.
Because everyone was like, hold on, Mark Zuckerberg, you can't spend that much on chips. But the other thing that happened in the after-hours session in that moment, April 24th, was NVIDIA jumped. Of course it did, because that's where the money goes. So that's how you join the dots here. And once again, Meta's actually just raised the bottom of that guided range, minimum $37 billion to $40 billion. That's where the money goes.
But can we stay with Meta for a second?
Please, yeah.
Sorry, is it just that it did do okay? I think it's still trading higher in the aftermarket. It's up about 4.5%. But because the last quarter, they beat. And so are they showing that these investments are paying off? Or I don't know. We'll see if we get some color in the aftermarket.
Yes, very simply put, you go to their forecast for sales for the current period, right, which is $38.5 to $41 billion. So even at the midpoint, that's pretty good against where the street was looking. I think the consensus was 39.2.
Right.
The point is, with Meta, it's probably a little bit easier to see where the investment in AI helps, and that is simply that it makes their advertising more valuable. You know, that's where the money's to be made. They're not necessarily selling a generative AI product, but they've maintained a story where they're like, we're doing a lot of work with AI, and what we think it will do is just make the ads we place against our existing technologies better, command a higher price. Well, that's evidenced in the forecast for their sales, pretty much.
Sorry if you were looking for a personal assistant that would do the dishes, because you're just getting better targeted ads, Carol.
One day.
One day. I want to go back to AMD, because you had a big interview with Lisa Su, the chairpresident and CEO of AMD, a little earlier. You mentioned the environment. It's something that she talked about in that interview.
We're seeing an environment where everybody needs more data center AI infrastructure. You know, computing is really the foundation of what drives, sort of all of these AI capabilities going forward.
That's Lisa Su, the AMD chairpresident and CEO. What did you want to get out of that interview, and what did you take away, Ed?
So Lisa Su and AMD, we set the stage right. They're a distant second player where they have $4.5 billion of sales for their amazing AI chips, and NVIDIA has $100 billion. But to her credit, they have been consistent that they're supply constrained. In other words, if they're the manufacturers that make their chips, TSMC, made more for them, their revenue would be much better. So they've been consistent, and you give them some credit for that. I think the thing that Lisa does very well is that was quite abstract, what she said. It was quite big picture. The environment, everyone's spending on infrastructure. What she means by that is people are still building data centers. Well, we know that. Microsoft told us last night. Right. But she also gave specific examples of how their AI accelerator is being used. She used the example of Microsoft. And she said that, she gave names of specific projects Microsoft was working on where they're using their MI300X and I guess not using NVIDIA's technology. So it's just convincing, I guess, at this stage.
Yeah, okay. Intel. Stock was up about 2%. They have some convincing to do, although investors seem to like the idea of job cuts, and they're still trying to figure their way forward. I don't know. How do we think about Intel and the news today? I feel like Pat Gelsinger has been working on it for a while.
Okay, so there are basically two battlegrounds for Intel on the product side. They are data centers and they are PCs. And historically, Intel is the absolute leader in PCs, right? Intel Inside. Right. I grew up with that.
Dun, dun, dun.
Earnings have really suffered and languished behind those peers. AMD and NVIDIA are making gains in the market for AI accelerators that go into data centers and also CPUs, which Intel's good at. Intel might do $500 million this year in AI accelerator sales. It doesn't really register against NVIDIA. And at the same time, there's an important data point in the Bloomberg story. So sources say thousands of layoffs are coming. That's a lot. But remember, Intel has 110,000 employees around the world. I'll pull up AMD just real quick to give you a comparison. But they have something that most US chip makers don't have. They're not actually chip makers. Intel is. It has a foundry and a fab business where it wants to become...
AMD has about 26,000.
Right.
Big difference.
And that accounts for the difference, right? Yeah. And Intel's been through layoffs before, but they have all this money coming in from the US government and the CHIPS Act. They're trying to be a contract manufacturer, and they're struggling to keep up with all of this, and often being prudent helps.
Ed, 10 seconds on Amazon tomorrow.
AI will be the story, but look at the advertising business. It's pretty much the fastest growing ad business out there. Always surprises.
Have you subscribed to the ad-free version of Prime Video yet?
I have not. I'm very comfortable with ads, although when Rings of Power comes around, I'm so stoked. Maybe. We'll see.
All right, there it is. That's what you got to look
Just
for.
depends what you're watching. Ed Ludlow, thank you so much. So fun to have you here on the East Coast. Co-host of Bloomberg Technology on Bloomberg Television. Catch them at 11 a.m. Wall Street time, Monday through Friday. All right, folks, we're not done quite yet, but man, a lot of earnings today.
Yeah, Doug Krisner up next with a preview of Daybreak Asia.
Company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Meta Platforms after hours up now by about 4.5%. Meta did report better than expected sales for the second quarter, offering evidence that the company's heavy investments in artificial intelligence are helping it sell more targeted and personal ads. Again, Meta after hours up by about 4.3%. Qualcomm, the world's biggest seller of smartphone processors, gave a strong revenue forecast for the current period, indicating that demand for phones is rebounding. And ARM Holdings handily beat analyst estimates with its quarterly results, but held off on boosting its annual forecast. Pershing Square USA says it is withdrawing its previously announced IPO. Bill Ackman says the company wants to reevaluate PSUS's structure to make the IPO investment decision, quote, a straightforward one. Boeing has appointed Kelly Ortberg as its next CEO, entrusting a retired veteran of the aviation industry with one of the most complex turnaround challenges in corporate America. George Ferguson follows the aerospace industry for Bloomberg Intelligence.
When I look at his experience, right, it's with smaller component manufacturers. If you think about Boeing, Boeing is a big systems integrator, right? You bring in your parts from all around the globe and you turn them into airplanes in the factory. And so to me, that feels a little bit like a different skill set. And that's been the challenge here at Boeing, is sort of bringing all those components in and turning them into airplanes with top-notch quality.
BI's George Ferguson. The shares did advance today as investors welcome news that Boeing had finally settled months of uncertainty after current CEO Dave Calhoun announced he would step down in March. Boeing shares up today by 2%. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody, Tim and I.
Okay. Well.
This is what
She's looking at Doug. I don't know what's going through her head. She's thinking about Meta platforms.
It was a Fed Wednesday. It makes me a little,
But it was an abbreviated show for you. You have a lot more energy. You want to keep going? I can make room for you.
That would be an emphatic no.
All right.
Not going to happen. But an interesting day where markets rallied, and rallied initially, especially as the Fed chair got into his commentary. How many times did we hear September for him to be very specific about the possibility and how that they talked at this meeting
About a rate cut.
Yeah.
Right.
Like, I thought that was a very significant shift, if you will, in terms of the Fed policy. But at the same time, then we got some news about Iran maybe considering some kind of retaliatory move against Israel. And you did see oil spike, stocks dip a little bit.
Stocks pulled back a little bit. Quite a bit. They kind of gave up the gains during the Fed meeting.
Yeah, I mean, we didn't go into negative territory, but nonetheless, it's just a reminder that, we can be reined in. Anyway, what's top of mind for you? You also have
Everything that you just...
Rate cut in Japan?
Yep, rate cut in Japan. That really wasn't a surprise. I mean, we were talking about this on the show yesterday. One of the public broadcasters in Japan was putting out the idea that maybe they would go ahead and raise the policy rate to 25 basis points. That's exactly what we got. We got a reduction in the bond buying, and then a rally in the Japanese currency. And
as
I think
expected, right?
Totally. But one of the things that may have been contributing, you're talking about this move into haven assets, the oil trade. Some of the yen buying may have been related to the Iran story, and that then U.S. equities come off. U.S. Treasuries, though, I didn't really see much of a haven bid. If you look at the dollar was weak today, kind of tracking the drop in yield.
Right.
So maybe there would have been a more dramatic move lower in yield had there been a quality or some haven buying in U.S. Treasuries. I didn't think that was really getting a lot of traction.
Go down a little bit. But you know what? Michael McKenzie, who follows the U.S. rates markets here for us at Bloomberg, he said the other thing is it's the end of the month. And he goes, I'm not saying that some of this wasn't because of the Middle East concerns.
Yeah, you're right.
But he said that's another thing that certainly you play into it. He said you're also getting to a point where, Treasury investors are realizing that we're probably topping out when it comes to rates. And so if you're looking to buy, especially at the shorter end of the yield curve, you're going to probably do some buying now and lock it in.
I was listening to your conversation with Mr. Ludlow there. Great conversation.
Thank you.
But the other part of the story here, when it comes to chips, you're very good.
Thank you.
The chip story is the fact that the Biden administration may put some export controls on chips, memory chips, to China. These would be coming from companies like Samsung and XK Hynix. Micron Technology also.
Yeah.
But when you look at those high bandwidth memory chips, which go together with the graphics processors that NVIDIA manufactures, they are combined in these servers because you need the memory, the high bandwidth memory, to be able to keep up with that level of processing. So it's going to be very interesting to see. We may get an announcement in the next couple of days as whether the U.S. really leans into that to keep China from accessing this cutting edge technology.
Did you talk about ASML yet? Did you mention ASML? Because the U.S. could exclude ASML and Tokyo Electron from new U.S. chip export rules for now, according to our own Mackenzie Hawkins and team.
So ASML, that's the ultra high frequency lithography, right?
Yeah.
We're talking about, which is really used in the
Huge
processors,
machines.
right? This is on the memory side.
Yeah.
Okay, so I think we just have to be careful about that.
So this is these are two separate.
Well, they're part of the same story because you need one to work with the other. You need the advanced graphics processors.
But then you need the capacity
right,
to store.
the capacitors that NVIDIA produces, combined with the
do you see Doug
high
looking at us?
bandwidth
He's
memory
looking
chips.
at us like you two knuckleheads.
No,
Do you
not at all.
listen to
Not at all. It's the same.
Ed
It's
Ludlow?
part of the same story.
He's like, have you not read Chip War?
Yeah, like
Like
who lets these two do a show? Like,
Yeah.
come on. You are.
Doug, we love you.
I just love
this
it.
is why we love Doug.
Yeah, thank you.
Heart Doug.
Back at you.
We love Doug. All right, check out Daybreak Asia right now, though. Balance of Power.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Kaylee Lines, I'm Joe Matthew.
Donald Trump questions Kamala Harris's black identity in a roundtable at the National Association of Black Journalists Convention. We'll get reaction this hour from Democratic Congressman Emanuel Cleaver of Missouri and former Obama campaign manager Jim Messina.
Iran's supreme leader orders a direct retaliatory strike on Israel for killing the political leader of Hamas in Tehran. According to the New York Times, we'll have more on how investors should watch this escalating situation with PIMCO's Libby Cantrell.
And we'll also ask her about Fed policy after today's decision to hold rates steady, with Chair Jay Powell signaling a September cut is on the table, even with the presidential election around the corner.
The question will be whether the totality of the data, the evolving outlook, and the balance of risks are consistent with rising confidence on inflation and maintaining a solid labor market. If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September.
Joining us now with more is Michael McKee, Bloomberg International Economics and Policy Correspondent, who, of course, was in the room for that press conference. So, Mike, it does seem that he opened the door pretty wide open. Can he shut it after this?
He wouldn't shut it, but the data could shut it, I suppose, especially if we get some bad labor market data. And the data all start on Friday with the jobs report. But we get two jobs reports ahead before the next Fed meeting. We get two CPI readings ahead of the next meeting and one PCE inflation reading. So the Fed will have a lot more data, the totality of the data that he's talking about, to base their judgment on.
You asked Chair Powell about the way he looks at all of this and whether he sees this through the eyes of Americans who are paying the prices we're talking about, dealing with the interest rates, in some cases the lack of savings left over from COVID. Does he think of it that way?
Not in a job sense, and he sort of separated those two thoughts. Yes, high interest rates are a burden for Americans, but inflation was a worse burden. Now maybe that's starting to balance out, or the balance is tipping towards high rates. But he said our job is not to think about that. Our job is to just meet the mandate of low interest rates and maximum employment.
Next stop, the jobs report Friday.
The jobs report on Friday, and it could be interesting because we're only 1/10 of a percentage point on the unemployment rate away from the SOM rule, triggering the SOM rule, which posits that once inflation gets to unemployment gets to a certain level, then it goes up much faster. And if that were to happen, then that would scare the markets, and that might scare the Fed. And then the question is, are they reacting to bad data, or are they still on the path?
A lot more references to the SOM rule. Bloomberg's Michael McKee, it's always great to have you in Washington. Thank you. As we turn to the race for president today, Donald Trump addressing the National Association of Black Journalists. This was in Chicago, happened this afternoon. And from the start,